For literally thousands of years, gold has been the ultimate symbol of wealth. But let's be real, in a world full of crypto and tech stocks, does this ancient metal still have a place in a modern portfolio? So we're going to dig in and find out. Has gold lost its luster, or is it maybe more important than ever?
And that is the big question, right? In this explainer, we're going to tackle that head-on. We'll break down the pros and cons, figure out what really drives its price, and show you exactly how you could add gold to your own investment strategy.
All right, so here's our game plan. First, we'll look at why gold has this timeless appeal. Then we'll get into the nitty-gritty of what moves its price. After that, we'll weigh the advantages against the risks, and finally, we'll wrap up with how you can actually invest. Okay, first things first. Let's talk about gold's fundamental appeal. Now, when you think of gold, you probably picture rings, necklaces, that kind of thing. But honestly, its role in our modern world goes so much deeper than just looking good. I mean, just look at this list. It's kind of wild, right? Of course, there's jewelry, but it's also in dentistry, and it's a critical component in the electronics we use every single day, from our phones to the satellites orbiting the Earth. It's this unique mix of cultural value and critical industrial need that really props up its role as a solid investment. So, we know it's useful, but what actually makes the price of gold go up or down? It's not just random chance. It's more like a delicate dance between a few key economic forces. Let's get into it. First up, and this is a big one, the US dollar. The easiest way to think about them is like they're on a seesaw. There's usually this inverse relationship. So when the value of the dollar goes down, it takes more of those weaker dollars to buy an ounce of gold. So what happens? The price of gold tends to go up. And yeah, the opposite is usually true too. A stronger dollar can push gold prices down. Next is the overall health of the economy. Think about it. When the economy is booming, unemployment is low, and things are looking good, investors often feel a little more adventurous. They feel more confident putting their money into things like stocks. And that confidence can lead them to sell off their gold, which, you guessed it, tends to push its price down. And there are two other major players in this game. First is monetary policy, especially interest rates. When interest rates go up, things like savings accounts or bonds suddenly look a lot more attractive because they pay you interest. Gold, on the other hand, doesn't. And then there's the big one, uncertainty. A political crisis, instability, any kind of global turmoil, it often sends investors scrambling for safety. And for centuries, that safety has meant buying gold.
And this whole idea of running to gold during a crisis brings us to a super important concept, the safe haven asset. It's exactly what it sounds like. It's an investment people flock to when the markets get shaky. Why gold? Well, because its value isn't tied to one company's quarterly earnings or one government's credit rating. It's seen as a stable place to park your wealth when other assets are tanking.
All right, so we know what moves the price. But why would you actually want it in your portfolio? What are the specific upsides? Let's get into the good stuff. When you really boil it down, gold gives you three main advantages. First up is diversification. It often moves in the opposite direction of the stock market. It's like the seesaw to the stock market's saw. That can help balance out your portfolio when stocks take a hit. Second, it's very liquid. That just means you can usually sell it pretty quickly if you need the cash. And finally, and this is a huge one, wealth preservation. Because you can't just print more of it, gold has historically held its value against inflation, which means it preserves your purchasing power for the long haul.
But hey, it's not all sunshine and rainbows, right? No investment is perfect. And to make a really smart decision, you've got to look at the other side of the coin. So let's break down the risks that come with gold.
Okay, so here are the main drawbacks to keep in your back pocket. Unlike stocks that can pay you dividends or bonds that pay interest, a bar of gold just sits there. It doesn't generate any income. The only way you make money is if its price goes up. It can also be a bit of a roller coaster in the short term, with prices swinging pretty dramatically. And this is key. Just like any investment, there is always risk involved. There's simply no guarantee you'll make a profit.
Okay, so let's say you've weighed the pros, you've weighed the cons, and you're thinking, maybe this is for me. How do you actually do it? How do you invest in gold? Well, you've got a few different paths you can take. This chart lays it out perfectly. You've got a few main options. You can go old school and buy physical bullion, actual bars or coins. But then you have to worry about storing it safely. Or you can invest indirectly by buying stock in gold mining companies. Then there are gold ETFs, which are basically funds that track the price of gold. They're a super popular way to get in on the action without having to own the physical metal. And lastly, for the really advanced investors, you've got futures contracts, which are way more complex and definitely carry a lot more risk.
And this is so important. There is no one-size-fits-all answer here. There's no single best way to invest in gold. The right choice for you depends completely on your own financial goals, how much you already know, and, frankly, how much risk you're comfortable with.
You know, this quote just nails it. It really gets to the very core of why people own gold. It's not a get-rich-quick scheme. Its main job in a portfolio today is a defensive one. It's there to protect your wealth and act as a safety net when other parts of the market get turbulent.
So that brings us right back to the beginning and to the one question that really matters. In our modern world of digital assets and cryptocurrencies, does this ancient physical metal still have a place in your portfolio? Well, now you've got the tools to decide